What's up, everyone? It's Karthik with MoneyVest, and we are seeing some very nice gains pre-market. Talk about this continuation rally to further accelerate to the upside as SoFi is pushing higher. We've also got Nvidia moving higher very nicely. It's up over 79, 80 basis points, getting up to 193, and SoFi set to open at a brand new all-time high on a double beat on earnings and, of course, revenue coming in just shy of $950 million with EPS coming in at 11 cents per share. So very strong beat on both revenue as well as EPS. And President Donald Trump also mentioned that he is going to be meeting with Nvidia CEO Jensen Huang on Wednesday. So made the comment Tuesday in an address to business leaders in Tokyo before traveling to South Korea. The US AI chip makers said last week that Huang plans to meet the global leaders and top Korean executives when he attends the Asia Pacific Economic Cooperation CEO Summit in South Korea as well. So we're seeing a very, very nice move to the upside. QQQs are up over 18, 20 basis points. We got the S&P 500 up over 12 basis points as well. If the audio and the video is good, just give me a thumbs up and we are good to go. We are ready for this live stream. So adjusted net revenues up 38% to a record $950 million for SoFi. Adjusted EBITDA up 49% to a record $277 million. And we got fee-based revenue up 50% to a record $409 million. Member growth up 35% to a record 12.6 million members, and product growth up 36% to a record 18.6 million products for the company as well. And of course, raising a 2025 guidance for this year for revenue and earnings as well. So all in all, we got a top blockbuster quarter with records across the board, setting new records in members and products. 905,000 new members joined SoFi in the quarter, up 35% from the prior year to 12.6 million. SoFi added a record 1.4 million new products, up 36% from the prior year to 18.6 million. And delivering results here with SoFi's one-stop shop. And coming over to the numbers, and this is where it stands. Everything consistently growing technology platform, which again is part of their Galileo here, up to 158 million members. And scrolling down a little bit further, this is again all the business specific details. I want to come over to the guidance for the company as well. So guidance and outlook. For the full year 2025, management now expects to add at least 3.5 million new members, which represents approximately 34% growth compared to 2024 levels. And also, the net revenue, adjusted net revenue, approximately $3.5 billion, which is 165 million higher than the prior guidance, and implying approximately 36% annual growth. And also expecting adjusted EBITDA approximately over $1 billion, which is above the prior guidance of 960 million. And lastly, expecting adjusted EPS of approximately 37 cents per share over the prior guidance of 31 cents per share. So based on the prior guidance, the company was trading at about 100 times earnings, and now we are maybe a little bit better. If you do look at 31 cents divided by $31 divided by 37 cents, we're looking at 83 times in earnings multiple for the business right now, since it's trading at a new all-time high and just over $31 per share as well. So that's where we are. Again, if the audio and the video is good, just give me a thumbs up. Just want to make sure that everything is working well. And yes, PayPal becoming the payment partner for OpenAI, also pushing higher on some pretty strong earnings there. So PayPal is up over 14, 15%, 11% now, trading just up to $78. And again, I mean, this has, been a stock that's been trading sideways and fluctuating in that range for a really long time between, $50 and $90 per share. So you can see that, we've seen PayPal in that range for, more than 3 years since 2022. PayPal has been trading in and around that range between $60 to $90, more so between $50 and $90 as well. So we're seeing a very nice move to the upside as it partnered with OpenAI to integrate its payment wallet into ChatGPT, boosting shares about 14% and also coming in with some pretty decent earnings, about $1.27 to $1.31. And estimates are for, of course, revenue. We're looking at about $8.42 billion, so coming in line with expectations here. and EPS coming in at about $1.20, $1.34 versus estimates of about $1.20 for the company as well. Volatility sitting at just under 16, with markets sitting at a brand new all-time highs here. People said the magic words, OpenAI. I know, right? OpenAI is the magic word here for almost every company. Could you look at Bloom Energy here? Let's take a look at Bloom Energy and Grab stock as well. We've talked about Grab briefly in our previous updates and videos. And we've got a lot of consolidation sideways in that range for Grab. We got a resistance very strong around 650 and a support around 570 down to 432. So, got a little bit of a pullback. 570 is going to be that support, resistance back up to 650 for Grab here. And then let's take a look at Bloom Energy. So what is going to be that ticker symbol? BE. On a very, very strong run up here on a weekly time frame. Looks like it has absolutely been crushing it since April. Almost 700% gain. So coming over to the monthly time frame, looks like a very, very good bull flag breakout for Bloom Energy. So this was a nice little lower high and lower low pattern. Of course, prior to that, we saw a very strong gain, consolidation a little bit, and then a very nice breakout to the upside. But now it is extremely overbought here, even on a monthly time frame. So just be a bit more careful with this stock at the moment. And support level is going to be $41, $42. But this, of course, has been a very strong week after week of gains for Bloom Energy. The real Mr. High of Music. I remember when PayPal wasn't moving months ago, and look at it now. I would be surprised if Warren Buffett management team starts sniffing it. Well, I mean, to be very honest, it is still within that range. Of course, it's been consolidating sideways, but if you really sort of drill down, PayPal was literally here at these prices in the beginning of October. Literally about, 18 days ago? 3 weeks ago, we were here at these prices, $77, $78. So, yes, I mean, we've seen a lot of consolidation, a lot of range-bound trading action for PayPal. And, obviously this partnership could be huge for the company long-term. But really, the whole idea is how are they going to capitalize and how much Wall Street is going to like PayPal for the long-term, right? Based on this partnership and based on everything else that they're working on. So I would confidently put down 93 to as much as $103 range. So we've got a resistance between those $10 level here as a very strong area of resistance. And if and when PayPal is able to break above this resistance is when we could be looking at a brand new beginning for PayPal, technically speaking, because we've really been below this level, since 2022, right? So that would be a 3-year high if PayPal is able to break above $94 to $105 per share. So anything inside this red rectangle is an area of resistance. And if PayPal is able to break above this, then yes, we could be on our way to some very nice potential gains for the long term. We got another resistance at 122 for PayPal. But the bottom line is, I mean, it hasn't seen a triple-digit stock price in over 3 years. So that's the consolidation is what we're seeing. Yes, FOMC tomorrow, October 29th, Wednesday, is when we have the Federal Reserve meeting. Very, very important meeting, of course. And not to mention the entire earnings calendar is still pretty packed when you consider what kind of companies are reporting today and tomorrow and the day after. So you got Visa, Booking Holdings, Caterpillar, Boeing, Microsoft, Google, Meta, MasterCard, Eli Lilly, Merck, Gilead Sciences, Amazon, and Apple. Those are some big heavy hitters that are going to be reporting today, tomorrow, and of course later this week. Cadence Design Systems also reported, so that's also part of our shopping list, by the way. So we are almost at all-time highs, not really much of an effect. We got about 0.5% lower. EPS coming in about $1.93. Revenues about $1.34 billion for the company as well. Scrolling down a little bit, and then let's see what else we have here. So Tuesday before the open, we got PayPal with a double beat again, $8.42 billion with revenues and EPS coming in about $1.34. And then let's just scroll down. We got SoFi with a double beat, $949 million, 11 cents in earnings per share, with also raising their guidance. So that's strong. And yeah, we got Insight also coming in with a double beat, $2.26 in earnings per share with about 1.37 billion in revenue beat also for Insight. So tomorrow, we've got all these companies. Chipotle is going to be reporting after the bell. ServiceNow, we got Meta Platforms, Verizon, ADP before the bell, CVS before the bell. Today we also have CoStar Group. This is another one, CSGP, to keep on your watch list. Been consolidating sideways, but it's been a very, very, very strong stock since 2009. I mean, this company's up like 3,300%, and really what we're seeing is a lot of consolidation for CoStar, right? So resistance here, a very strong support right about here at $69.70. And of course, if earnings and guidance come in strong, it could lead to a potential breakout as well. So yeah, so that's where we are. Booking Holdings, also part of our shopping list. They're coming in with their earnings after the bell today, $8.89 billion of revenue, EPS $97 per share. This is also a company that's trading a very high price, $5,250. It's part of our shopping list. It's been part of our shopping list for almost a year now, and it's done incredibly well, right? So in the last 1 year, up 20%. Since July 2022, of course, the stock is up over 240% as well. So this is the weekly higher low, and of course the uptrend that it continues to validate. So they're going to be reporting after the bell today. I mean, just take a look at the revenues, right? Revenues have exploded, profitability has gone up, and as a result, so has the stock price. So fundamentals have been very, very strong. And of course, Visa after the bell today with over $10.8 billion of revenue, just over $3.03 in earnings per share. Did you sell PayPal, or was that another stock? I remember you sold something and said you're out of it. Yes, it was PayPal. It is PayPal, and I have rotated that money into BITX, BMNR, IREN, SoFi, all these different high conviction stocks I've rotated into. So yeah, PayPal was the one that I actually got out of, and I've rotated that capital, like I said, into other stocks that I do believe over the long term have more potential for growth. CRM and Melli. Let's take a quick look here. So Salesforce and Mercado Libre. So Salesforce, I mean, this is the chart. This is been on a descending triangle. We got a very strong support inside this green rectangle as an area of demand here. Of course, we got up to that resistance around 255, 256. If you do get a breakout, resistance all the way up to 274, 275 is what CRM, the next target, the next resistance is going to look like. Support level is going to stay put here inside this green rectangle at 233. Mercado Libre, we've been talking about this. So nice little bounce yesterday, up over 5.6%. This is going to turn into a support now for Mercado Libre. So very, very strong area of demand there. And a resistance all the way up to 26.24, 26.25, around those levels inside this uptrending channel. So very, very nice higher highs and higher lows. And that's where we're getting validated right now, which is the higher low, which is the support there. Okay, let's see. Few more names. Let's take a look. Wen, please. So WEN. Let's take a quick look at this. Wendy's. So it's been selling off quite aggressively. We're down from all-time highs, a little bit over 54, 55%. I think I've only gone to Wendy's like maybe a few times. I'm curious how people like Wendy's or not. Wendy's always reminds me of that joke from The Office where Michael is looking for names for women to date and Kevin puts down Wendy's and then he literally asks out Wendy's, the restaurant. So it always reminds me of that. It's always hilarious. But support level for this is going to be right here at 867. 870s, very, very oversold. So this could be a nice little swing trade idea, but it does feel like it's a bit of a falling knife right now. So any kind of confirmation, and we get smacked right back down here. So this is the lower highs and the lower lows right there for Wendy's. So a little bit of a tighter channel within which it's trading. So if you do get a breakout, possibly up to as much as 961, or even a breakout up to 1063. There is a possibility for a nice little reversal, but definitely need to get some nice confirmation there because the volume has been dropping off and the price also has not been moving very much. Okay, so FOMC, yes, tomorrow, very, very important. Let's take a look at Weeble. So coming over to Bull here. A lot of consolidation also for this stock. And I do believe Weeble has a ton of potential long term. I mean, they just need to figure out how to grow their revenues. And this, if they're able to massively gain market share, based on the services that they offer, then this could also be the next potential Robinhood, right? Robinhood really got that early mover advantage with $0 commission free trading. And then, of course, the UI, the ease of use for retail traders, they really captured that audience very well. And Weeble is also, of course, trying to do the same. And Weeble, I really do like the platform very much. In fact, I use it every day. When I'm doing my analysis, on options trading, I'm looking at the options chain, a little bit of technical analysis, but really creating my watch list. In fact, Weeble is actually one of the first things I open every day in the morning when I am looking at pre-market, right? So you've probably seen that in my videos where I'm going over pre-market, overnight trading, how and what stocks are doing. I've got the winners watch list here that I go over. So it's got an incredible UI, very, very good platform in my opinion. Support level is going to stay at $10.20. That's pretty much close to the all-time high. And right now we are struggling at this resistance at $11.96, close to $12 for Weeble. So I might actually consider selling some puts on Weeble if it continues to trade in and around these levels. So if it sells off further, I might look into selling some puts on Weeble. Why has Oracle stock been selling off and flat while other stocks are rallying? Well, I think, really at the end of the day, it comes also down to valuations too. I mean, I remember right around here, we did a live stream. We talked about Oracle's earnings. I was in the US back then, and we had a very nice pop, 36%. But that move has really what's been faded down. I mean, it's still higher from its pre-earnings numbers. It's still up 17, 18%. And you also have to understand it's an $800 billion company, right? I mean, for stocks this size, in order for them to move, they have to keep up with that momentum, keep up with that liquidity. And of course, it's also trading at 65 times earnings. This is after the drop, right? After the drop that we've seen from Oracle, right? So it's down a little bit over 17%. Now it's actually trading at 65 times earnings and 14 times sales. So imagine prior to that, it was much higher. So valuations do indeed matter at some point. They have to, and they always do. So it's still higher from pre-earnings, 17% in a little bit of a lower high, lower low pattern. Valuation was a bit more expensive, still is. So I would watch 275 and 259 as two very strong supports for Oracle. What are your thoughts on GE? Let's take a quick look here. So General Electric, Aerospace and defense coming over. I mean, revenues, it's not a growth company per se. So it's really going to be a business which is going to be pretty stable. It's going to be growing at a reasonable rate. So you've got earnings, growing at maybe 3 to 5% per year. So it's going from 614 to 709, 821, 905. Same as the revenue that's been moving somewhat flat to slight growth here. We did see a little bit of decline since 2022. And then if you come take a look at the balance sheet, I mean, these are going to be heavily indebted businesses as well, right? So they're not like high margin, high tech businesses. Aerospace and defense has always been a very indebted business, right? Same as airlines, same as cruise lines, same as aerospace defense companies. A lot of them have a pretty big capex. So now this is, again, a stock fits the right portfolio, right criterias. But if you are, of course, looking for high growth businesses, there are, in my opinion, better opportunities. But GE Aerospace, given the stock's performance here, looks like has been an incredible performer. I mean, since April 25, it's up 95%. I mean, most stocks are up since April 2025. But even long term, this stock seems to be very, very strong. So, yeah, I mean, fits the right portfolio if you are looking into that. Okay, let's take a look at Oscar. We'll take a look at HUT as well. So let's come over to HUT 8. And we're looking at a nice little rally a little bit. Resistance is going to stay up right about there at around $57, $58. We saw a nice uptrend of higher highs, higher lows every single time the dip gets bought up for HUT 8. I think this is a little bit of a crypto-related stock, if I'm not mistaken. Yeah, so Bitcoin miner focuses on mining. provides digital asset mining, hosting, managed infrastructure, so on and so forth. So you can see that we've got the very nice 50 EMA that it validates very nicely. And a resistance is going to be closer to $57.50 for HUD 8. Oscar, let's take a look at Oscar Health here. So, a little bit of consolidation. We have been trading sideways in that range for a really long time. We've got a resistance, double top, triple top around $23, $24 with a very strong support at $13, $14 for Oscar. So lots and lots of consolidation and a little bit on that range for this stock here. Support level is going to stay up at 17, 14. Anything under 17, 16 bucks, I am dollar cost averaging and picking up more Oscar. The closer it gets down to inside this green rectangle, the better. And again, I did add 7 to 8 stocks, new stocks, into the shopping list yesterday. So I mentioned that in the Discord as well. Added Oscar, added HIMS, added Axon Technologies, added Ubiquity, added Mercado Libre, added DoorDash, added Atlassian. These are all new companies, right? New businesses that we've analyzed, have really, met the criteria for what we look for. And are now looking at pretty good opportunities long term. And I included the buy targets as well. So that's going to be available on there. Okay, let's take a look here. HIMS would join the party. Maybe you should partner with OpenAI too. Yeah, I know. HIMS has been really all over the place. I mean, this stock has seen so much volatility, very similar to what you'd expect from a high beta name. But this is like a whole another level, right? HIMS rallies 200% and then immediately drops 66%. Then rallies 177%, then drops 38%. Then rallies again 77%, then drops 41%. Then, of course, 56%, and now it's back down. So, I mean, it's insane level of volatility here. For HIMS and hers. So support level is going to sit put at $48 down to $40, $41 per share. So again, inside this green rectangle, we got a very strong support there for HIMS and a resistance up to as much as $60 and $69, $70. So those are going to be some levels to watch. Among other high beta, high growth stocks here, Iron trading down to $65. I was actually very surprised and I would say even lucky to have rolled this option at $65 covered call strike for Iron to $70 for next Friday, November 7th. And I still got a very nice net credit of over $100 and was able to unlock another $5 in capital appreciation. I was not expecting after yesterday's big rally, at one point Iron was trading up to $66 a share. I was not expecting to roll it out to just one more week, $70 and get a net credit. I was expecting it to be at least a few weeks out. But yeah, next week. Also because there's earnings coming up, right? So Iron's earnings are going to be on November 6th, Thursday. So that's where we are. Let's take a look at Microsoft. Up 3.6, getting up to almost all-time highs here. OpenAI to offer ChatGPT Go free for a year in India. Of course, Microsoft is a part owner of OpenAI. But then looking at other catalysts, this was 1 hour ago. Let me just come over to FinViz. We'll come over to news, stock-specific news. And let's see if there's anything related to Microsoft here. Nothing yet, but I'm sure it will come out once it does. But yeah, 3.7, almost 4% gain for Microsoft here. So it came out, OpenAI completes restructuring, solidifying Microsoft as a major shareholder. OpenAI contracted to buy incremental $250 billion of Azure services. A couple different catalysts came out. Microsoft and OpenAI signed a new long-term pact. Microsoft now values its stake in OpenAI Group at about $135 billion, roughly 27% ownership after the recapitalization. And OpenAI also committed to buy $250 billion worth of Azure services. So here we go. I mean, this is the circular flow. This is the loop. This is the closed loop. Is, you just keep rubbing each other's back. And that's it. I mean, everybody gets rich, right? Everybody makes money. So that's what's happening. More and more deals coming out. So after the recapitalization, we're seeing Microsoft as one of the largest, owners of equity holders and owners of OpenAI at about 27%, worth about $135 billion. And in return, OpenAI is saying that we're going to buy Azure cloud services worth about $250 billion from you. So we're seeing a nice little pop in Amazon as well. And of course, Microsoft is doing that. And Amazon, of course, with the layoffs also coming in, which, as unfortunate as it is, I mean, it's bad news for the employees, but good news for the stock price. And that's just how the world works, because layoffs means lower cost, means higher earnings, which is what Wall Street cares about at the end of the day, is like bottom line profit. Give us more profit and more money. That's what it comes down to. SoFi earnings we covered earlier in the beginning. So definitely do check that out. Go back, I would say like maybe 20 minutes or so. We were covering that earlier in the beginning. Dude, why is everything at all-time highs? I know. Everything is at all-time highs. We got QQQs up 37 basis points. We got S&P 500, another 27 basis points higher. Nvidia at 193. We got SoFi at 31. What's going on? How is this going to end? What's going to be the end game here? Are we just never looking back? Are we just going to keep hitting all-time highs after all-time highs? Or what's the deal here, folks? Are we in some kind of a simulation here? Nvidia's also up. Amazon's pushing higher. QQQ's running, getting closer to Tom Lee's S&P 7,000 target. Yeah, S&P is going to open in at around 6,900. 6,900 points for the S&P today. Incredible. Absolutely incredible. I mean, where were we? Let's see. S&P at the beginning of this year was at 4,800. And now we're at 6,800. So that's 2,000 points that the S&P's gained literally since April. And we're talking about a market cap of 60 trillion. So 40% is not a small amount. It's a pretty large amount. We're talking $20-25 trillion worth of inflows coming in as a result of this humongous face ripper running out of words rally. So October, yes, very much into October. We are very green by over 2%. Come over to SPY seasonality here. 2.79 after today. If the markets hold up really well, we're going to be up close to 3%. And just look at the last 6 months. May, 6%. June, 5%. July, 2%. August, almost 2%. September, 3.5%. And October is most likely going to be another 3%. And then what is going to be November and December? That's the big question, because I really am curious, and I'll do this analysis. I think I've done this before. The longest monthly winning streak. I mean, look at 2017, right? So 2017 was a very, very interesting year, because if you come over to the MoneyVest Index, right? So if you come over to the MoneyVest Index and you strictly go over to 2017, right? So right now we're looking at 2025. And what we have here is, of course, significant buying opportunities right about there, right? So we were 2.15, we were in panic on April 7th, right? April 7th was probably one of the best buying opportunities this year when we were in panic, 1.76, right? MoneyVest Index. Now, if you go back, right, let's check 2017. 2017 was one of the perfect years. 2017 and 2013, where we did not even get a single uncertainty read. We did not even get below 3.5 on the MoneyVest Index. You want to see what 2017 looked like? If you go back, so that's 2020, 2019, 2018, 2017. This is what 2017 looked like. Straight up. Literally, we didn't even dip below 3.5 on the MoneyVest index. And well, what did that look like? So this is 2017. January, 1.7% gains. February, 3.7. March, very, very small dip. Very small, like 4 basis points. Like almost negligible. It doesn't even matter. And then look at the rest of the year. Look at that rest of the year. Every month was green. April, May, June, July, August, September, October, November, December. And then January of 2018. So we literally had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 straight months of markets just ripping higher. 10 straight months. Unbelievable. And then if you come over to 2013, we also had a very strong year. 5%, 1%, 3.6%, 1.82%. This was the first 5 months. A little bit of a drop in June, pushing back up in July, drop in August, and then closing very strong rest of the year. So far, I mean, what this is like a very strong 6-month pump coming in from the market. Straight streaks. 6,900 on the S&P, and the NASDAQ is going to open most likely around, we take about 40 basis points from here, we're looking at around 23,750. So maybe another 100 points higher than where we are right now. Nvidia, 193.50, another 1%. How is Tesla doing? We haven't discussed Tesla. 75 basis points. So pre-market, we got up to as much as 457. So we're seeing a little bit of a pullback there. Volatility stays low. Ethereum back up to 4,100. Bitcoin just sitting shy of 115. Crude oil just trading back below $61 a barrel. Market breadth has, of course, been improving. MoneyVest index is at 3.7, 3.71. And this market just incredible. Tyler says it's not incredible. Market should be slow and steady upwards reversion, not straight up. The bigger it is, the harder it falls. Yeah, I mean, you know, that's when markets get very parabolic. We get extremely overbought. That's when things are very, very interesting, right? That's when volatility spikes. And what really happens, what really starts to happen is investors, institutional investors, what they do is they start to hedge their portfolios. And when they start to hedge their portfolios, what do? They buy the cheaper put options. And that's exactly when, if you guys remember, just a few weeks ago, we were talking about VIX being elevated, right? It was elevated up to as much as right here, right? So if I show you this, after this pump here, these 3 days were the telltale, right? This is where the volatility was elevated. It wasn't spiking, but it was elevated, right? 20, 21. And so I did a couple of videos talking about, hey, the VIX is elevated, meaning that institutional investors are most certainly hedging right now. They're buying puts, and as a result, be on the alert. Well, a couple of days later, of course, we did get that spike. We got up to as much as 29. This was the 90th percentile, right? As expected, we got up there. That was the buy signal. That was a cue. And now we're back down, right? We're back down to 15 and 16s. So the next time, obviously the lower we get down to, the more careful we need to be, the more cautious we need to be. But if we start to see the volatility kind of creep up a little bit, especially if it stays around 1920s for a little bit longer, that is a cue, that is a signal to be on the high alert here, because volatility could spike any day, and that's exactly what we have to be prepared for. 2017 was what I was comparing this year to, since it's Trump's first year after election again, and hopefully November and December are green as well. Yeah, I mean, if November, December ends up green, we're going to be 8 straight months of green, very similar to 2017. And then if you remember 2018, towards the end, it was brutal. 2018, we were back between these US-China trade wars. I remember this was something that I studied in school in 2018. By September quarter or semester, we talked about the US-China trade war. October, we were down 7%. December, we were down over 9%. And that actually, rippled into us into a bear market. And then 2019, beginning January, markets rebounded really well. January, February, March, we were back very strongly to new all-time highs. So yes, if you do compare this to 2017, and November, December are strong. Going into next year, given that there are no surprises for us, markets can continue on this healthy. I say healthy because it's been rather stable with some dips along the way. It's obviously not all parabolic, but we have seen dips come in from the market. I mean, this right here was a dip. Right here was consolidation. Right here was a dip. Right here was a dip. This was a nice little dip. So we have seen good dips in this market along the way. But yes, we're also getting expensive though. 26, 27 times earnings is no joke for the S&P 500. It's a lot. It's a lot. So, okay. Let's see. Market's going to open in about 10 minutes here. And, also one more thing I want to mention is the concentration. And what we're going to do is we're also going to include in the new redesign here, the level of concentration for Magnificent 7 and the top 10 stocks for every single year. And what that's going to allow us to do is really understand how that concentration has gotten bigger and bigger and bigger. Because top 10 most certainly 15 years ago, 10 years ago, did not make up 40% of the market. Because that another is a huge telltale sign that, okay, market's gains, the biggest contributors are the top 10 companies, which is less than 2% of the S&P 500, contributing for more than half the gains, and is concentrated by 40% right now, 41%. This is also a brand new all-time high, by the way. I mean, we've never seen this level of concentration ever in the history of the market, where we're sitting at over 26 times forward PE, and the market's notional value is sitting at $62 trillion. So, yeah, there's a lot of money sitting there in these Magnificent 7 stocks that I bring to you. 21 trillion. And if you include for top 10, we're looking at 25 trillion. So, even if you do the sector breakdown by market cap, technology by far. Then we've got financial services because you have companies like Berkshire Hathaway and JP Morgan and Visa. Then you've got comm services. You've got companies like Google and Meta in there. Consumer cyclical, you have companies like Amazon and Tesla. But technology, man, just these top three behemoths, Nvidia, Apple, Microsoft, take the crown for the level of concentration there. Yes, we already talked about PayPal earlier. We went over that earlier. So make sure that you go back a little bit. You can check that segment out and then jump back into the live stream. Let's take a look at gold. Gold is back below 4,000. So we're seeing gold here really selling off aggressively. I mean, 2 back-to-back weeks of insane selling pressure coming in from 4,300. It's down about 10%. And so for me, I'm looking at gold once again, more on a physical gold basis because that's really what I like to accumulate. And so I'm looking at around $3,700, $3,800 per ounce here for gold as a nice little area of support to watch and for me to potentially accumulate. We're breaking down below this support as well. So resistance is now going to be around 39.46. And this has been a very, very sharp reversal of lower highs and lower lows coming in for gold prices. So that's where we are. And even silver is down to $46, $47 per ounce here. So significant sell-off here. Resistance is going to stay put right there. 47.70s and a decent support at 45.80 per ounce for silver. Okay, yeah, profit taking coming in from gold for sure. Let's take a look at BMNR. What is the average retention time for VIX above 25 from the last 20 to 30 years worth of data? So by retention time, do you mean like how many days it spends at those levels? If that's the question, then we have already done some analysis on that. And this is exactly why it's so important to have these statistics at the back of your hand, is because once we get to those rare events, while other investors might be scrambling, on figuring out, okay, what to do, why did this happen, we are already there with the data, right? We know, okay, if it gets up to 29, right, closer to 30, we already know that the volatility is going to be the 90th percentile, right? Because 28.9, look at that value, 28.9. That's exactly what I mentioned in my Discord as well, right? I mentioned, okay, these are the 5 criteria that they need to hit in order for you to put any money into the market. If I'm buying because these 5 criteria, one of these or two of these or all of them will get hit. And one of the most important criteria is VIX at 29, right? Why? Because, well, it's the 90th percentile. 29 is very close to 30. So you can see the days above 30 here are 721, right? So last 25, 30 years worth of data. We're talking a lot of trading days. In fact, 8,514 trading days, right? So 8514 divided by 252, we're talking 33 years worth of data, right? 721 only are the number of days that it's spent above 30, right? So that's 8.47%. If I tell you, hey, the markets right now are in an environment, there's a condition in the market where we've only seen 8.5% of the times in the last 33 years, I'll be a buyer. I'll be a buyer every single one of those times. I'll be deploying capital into the market. And when you tie that in with the MoneyVest index, which was an uncertainty, so it makes my decision a lot easier. It quantifies my decision. I don't have to think twice, and I can simply just dollar cost average. Okay, so we've covered all of them, guys. We've covered Microsoft, PayPal, SoFi. Let's talk a little bit about UNH right now before the market opens in about 5 minutes. And this is what we're looking at. Very nice reversal from UNH back up to $380. And I would put down a resistance that's going to be all the way up here at 398, closer to $400 now, and a support level that's going to stay put right there at 357 for UNH. So that's the range. That's what we have for UNH here. Of course, we did see a pretty significant sell-off and a nice little reversal. Profitability has really dropped down to under 6% in net margins here for the company in the second quarter. And of course, earnings are coming up. Well, they just reported, and as a result, they're pushing higher with a very strong beat and reaffirming guidance. 113 billion revenue coming in, and EPS just under $3 a share, both beating expectations, and it's nice 3.8% jump here. So, John, a strategy in 2022 for the MoneyVest index and volatility strategy, or you mean the options trading strategy? Which one are you specifically asking for? The options portfolio was flat in 2022. And then when it comes to the long-term investing, the portfolio was indeed down because I'm not selling when the MoneyVest index is at, let's say, greed or euphoria, because for me, it's never been a sell signal, right? It's not when the MoneyVest index gets up to these certain levels that I need to sell, but it's rather a buy signal for me because when these conditions are met, I am going to be deploying capital. I'm a buyer for those long-term positions and not the other way around. Why? Because markets tend to spend more time in optimism, in greed and euphoria. And as we've discussed over the last 200 years worth of data, statistically speaking, 72% of the times the markets have gone up and 28% of the times markets have gone down. So it actually, based on numbers, pays to be bullish. It pays to be long, and it pays to always bet on the upside than it does on the downside. And markets tend to stay overbought longer than they stay oversold. Markets tend to stay close to the all-time highs more than they stay in a bear market. And that's all purely based on the data. So next time you find the market's down over 20% from all-time highs in a bear market, volatility at 40 or 50, and the MoneyVest index down in the twos, I would close my eyes and I would just be dollar cost averaging aggressively. I would be a huge buyer in that market and not really think twice. That's what the strategy is all about. But then, of course, it requires a lot of homework, understanding what companies to buy at what prices, and also taking very precise, properly managed leverage trades, whether that's TQQQ, SOXL, based on that strategy as well. Okay, sell a February put, $40 strike. What stock are we talking? BMNR. So for BMNR, $40 is good. Yeah, I mean, but you're looking at February, right? I would bring that expiration back a little bit. I wouldn't go that far out. And I would keep it to like max 1 month to 45 days. That's it, but not 3 months out. When the market is down 20% by 2-year leaps, you'll get like 3 to 4 times. I just never had the cash for the past dips. Yeah, and that's why it's so important to be cash ready. You know, one of our mottos is cash ready. Why? Because always follow the liquidity framework, right? It's not that complicated, right? This right here, very simple, tells me where I need to be in terms of percentage of cash when the MoneyVest index is at a certain level. So right now, for example, we're between 3.5 and 4. Ideally, I should be prepared 20 to 30%. So, but I'm nowhere near close to 20%. I'm probably in the 10 to 12% range. So yeah, I can raise more cash and I can be more prepared. But right now I'm a little bit defensive, not prepared. But yes, that's where I ideally should be if we are getting up to 3.5 to 4%. I am going to sort of retest this and make these a little bit more loose, so to speak. So at 3.5 to 4, I will probably bring this down a notch, maybe 15 to 20%, because 30% seems to be a bit much, right? 30% is a lot, especially when the markets can actually stay here at these optimistic levels for a long time. We don't get to greed and euphoria very many times. So right now we're optimistic. Anything over 4 is when we're going to be in greed. Anything over 4.5 is when we get into euphoria. So yeah, Thomas, be cash ready because when the VIX is high, it's time to buy at the blink of an eye. Yeah, that's right. We don't get a lot of time to act. Anyway, so markets are open, everybody. So good morning. If you're just joining us, we got NASDAQ pushing up to new all-time highs. Where is the NASDAQ? 23,760. We got the S&P 500 on this fine Tuesday at just shy of 6,900 points here. So 6,900 is where we are on the S&P 500. I really want to see 6,900 on the S&P. I think that would be a huge milestone for the market. You got Tesla here, flat. Nvidia, 193.50. And let's take a look at SoFi. Up over 2.5%. Brand new all-time high. Just got hit 31.40 here for all-time highs. PayPal is up just under 6.5%. And as unfortunate as it is, look, I love PayPal. PayPal's a fantastic company, but the stock price just always gives in. Always gives in. I mean, it's, because of the fact that there's so many bag holders on PayPal, any kind of rally, any kind of 10, 12, 14% rally is seen as an opportunity to get out. That's what it's seen as. And, nothing would make me more happy for everybody that's holding PayPal, for them to, profit out of this and, of course, for PayPal to rally. But the stock price, I don't know what's wrong. The stock price seems broken. The company's fantastic. The management is great. I mean, huge changes are being made in order to be successful, but I don't know what it is with PayPal. I mean, even just a few weeks ago, it got up to as much as 77, and then what happened? Next day, 7.5% drop, 8% drop, back down to under 70. And would not surprise me if we get another red candle on the day with some profit taking. All right, everyone. So thank you so much for joining, everybody. Again, link's going to be down below if you're interested in joining our MoneyVest platform. There is a 30% annual discount available for just 3 more days, so 3 days left. If you are interested in joining. Again, access to all the real-time trade alerts, members-only videos, portfolio updates, MoneyVest website access, all the educational material and courses. Everything is going to be available. We've spent a lot of time building it. So any questions, email me at admin@moneyvest.com, and I am available for Zoom calls between now all the way till 1 p.m. Eastern. If you want to schedule one, just email me. I can show you around the Discord, the community, and everything else, and we can go from there. Thank you so much for joining. Have a great Tuesday. Don't forget, lots of earnings, and the Fed meeting is going to be tomorrow, which we are going to be live for. So thanks again. Happy investing.